Hi, and thanks for joining us again. I wanted to give you a quick update with regard to some superannuation changes that are happening on the 1st of July. Basically, you're able to put money into your superannuation fund before tax, and that's based on your age. So, if you are 50 years of age or more, you can currently put $35,000 in, and if you're under 50, it's $30,000. Now, from the 1st of July, irrespective of your age, you will only be able to put $25,000 into your superannuation fund before tax, and that importantly includes number one, works contribution, number two, salary sacrifice, and thirdly, if your employer pays any insurance on your behalf extra for your benefits via super, that figure as well. Also, if you earn more than $250,000 a year, you will now have to pay 30% tax in your super fund instead of 15%, unfortunately. After-tax contributions are the big game changer. So basically you can put in $180,000 a year now of your own cash, and using what's called a bring forward rule, you can bring 3 years contributions up front now. So you could put in $540,000. Now that figure reduces dramatically to $100,000 or $300,000 from the 1st of July. There's a small concession called spouse rebate, where currently if your spouse earns basically less than $14,000, you can put money into their super fund and get a rebate. That now increases to $40,000. It's a small win, but not a big thing. Superannuation limits are the big changer as well. 1.6 million is the new figure, so you can have $1.6 million in a pension fund, but nothing above that. Superannuation funds, if you currently have $1.6 million in your super fund, you can't put any additional non-concessional payments in from the 1st of July. And importantly, these transition to retirement pensions that we currently have running for those of you who are working and have your money in retirement in a tax-free structure, currently between 60 and 65, the pension fund earnings are tax-free and the distributions are tax-free. Unfortunately, the government's saying we'll tax you now on the earnings until you turn 65. So when you turn 65, the pension fund and the earnings become tax-free, but there's going to be a bit of tax to pay before you're 65 if you're still working. And when you turn 65, as I mentioned, it just turns into an age-based pension, which is fine. So in conclusion, what are the things we need to do? Well, basically, we want to maximise before-tax contributions, we want to maximise after-tax contributions. Superannuation is clearly still the best deal in town. It's the best investment vehicle. It's the best place to put your money for retirement. Importantly, if you are unclear on anything, please send us an email, and we have plenty of time before 30 June to get this right for you. Thanks for listening. Cheerio.